This is Ted Seifert of Zaner Ag Hedge from the CME floor, and we are going to talk a little bit about the grain markets. Here this week we had a USDA Wasde report, which is our monthly supply and demand report. This February report wasn't all that surprising by any means. And February reports, and this one in particular, we didn't have a whole lot of numbers that we were expecting to get surprised by. USDA in January had tied up or shored up production questions that we had from last year's crop. This time around, we're mainly looking at some small demand changes. We were looking at South American production and also looking at the global balance sheets. And again, most all of the numbers came in well within the expectations that we had as traders. However, there's a couple small takeaways here that I think are interesting to look at. And the first one will be the global corn balance sheet. While we saw global corn production increase by a little over 2 million metric tons, we offset that and then a little bit extra by increases in demand, mainly coming from increases in feed demand. So that is suggesting that although our global corn production is growing a little bit, mostly based on South America, Argentina, and Brazil crops, we also have a growing demand base down here at these lower corn prices. And going back to the talk we had last time about our outlook for maybe some higher grain prices down the road, this sort of ties in with that as well, because getting into the U.S. growing season here, we don't think that we're going to get quite the acreage that we need to sustain any sort of weather issue this year. So if we go in, we planted 88 million acres of corn last year. If we're able to plant 89.3 is actually our estimate for corn planted acreage this year. It really leaves the door open for any sort of major weather issue to give us a much tighter both domestic and global balance sheet going into next year. And if you look at what we've had weather-wise, basically beginning in fall and all the way through midwinter now, you do have some sort of concerning weather issues that are cropping up at this point that we can go back and use as sort of comparisons for analog years that we've had in the past. And in particular, when you look at the precip that we've had basically since November 1st, we're looking at some record numbers in a lot of areas. The idea is that rain makes grain. Well, we've looked at some of the worst growing seasons that we've had in recent history, 2012, 88, 93, and 83, and they all had one thing in common, and that was similar to what we've seen this year, which is record precip in that time frame. So that might be a little bit concerning going into the growing season. We've also had normal to above normal temperatures for the most part all the way from fall into winter. Yes, we've had some cold blasts here and there, but we've also had 50-degree days on Super Bowl Sunday, for example, here in Chicago, which the last time we saw that was the fall of 2011 to the early winter of 2012. We followed that up with a fairly dramatic, actually the biggest drought year we've seen in a very long time, which sent grain prices to new record highs. We're not suggesting that we're going to see that sort of scenario, but we are curious to see if we have some sort of weather issue here this year. And as we were talking about, we don't have the type of acreage to sustain much of a loss in crop potential this year. Back in 2012, we planted a little over 97 million acres. I think we'll be lucky to get 90 million acres this year. So the room for error is rather small this year. So keep an eye on that. The other interesting thing weather-wise is that we've come from a very strong El Nino, and the potential is for a capitulation of the El Nino into a La Nina growing season. That also can give crops a little bit of struggles in some areas for our next upcoming growing season. So the forecast, the longer term forecast, has some interesting tidbits to keep an eye on, but also the weather that we've had so far, we're able to make some comparisons there, and that's giving us a little bit levels of concern. In the short term, I don't see that being an actionable trade. I don't see that as being something that's going to move the markets right now, because we're a long ways away from this growing season. If anything, we could see the market try to buy some acres at some point, but at least to start the month of February, almost halfway through the month of February, it certainly feels like the market is complacent and willing to accept the amount of acres that seem to be getting priced in right now. This could set up for a bit of a powder keg longer term. But again, in the short term, you've got very big crops from 3 years of good crops. So we have big corn stocks at the moment. And while funds are near record shorts and end users haven't been aggressively buying, you could see reason for some upside potential, but any upside potential in the near term should probably be met with some pretty aggressive producer selling, which could keep us in sort of a sideways range here for the time being until we get some sort of new narrative, new weather input, new demand input to change the current talking points that we have in the markets. But longer term, look out for weather. This could be a very interesting growing season coming up. There are some long-term call strategies out there that I like quite a bit, and take a look at that. So again, this is Ted Seifert, Zaner Ag Hedge from the CME floor.